Over the hills and far away, a million miles from 12K, anywhere away with you. Alexa, stop. Yeah, so welcome to the show. My name's Rocky Outcrop. This is Bitcoin Technical Analysis. I have that song by Rita Ora called Anywhere stuck in my head right now. And we're looking at this, over the hills and far away, a million miles from 12K. Let's take me anywhere away with you. Okay, enough of that. So, anyway, it's properly stuck in there. So it's going to influence everything I do today, a million miles from LA. And my name is Rocky Outcrop. This is Bitcoin Technical Analysis. It is, I swear. And we'll be taking a look at the charts in just a second. I have a target of 2K subscribers. If you want to be a part of that story and be one of the OGs here in the Rocky Outcroptician community, then hit that subscribe button. Thanks so much for joining me. Hit the like button as well. Yeah, great. Let me know what song is stuck in your head in the comments down below. And what am I looking at over here? And why have I got this menu open on the left? Well, I was searching for this tool. I never ever use it, but let's give it a whirl. Give it a whirly, 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 whirly. How's it go again? Yeah, like this. That's right. Is this a head and shoulders that we're looking at over here on the price action? Maybe I should have done this on a cleaner chart. Let me just hide a couple of things here then so that we can take a look at this without so much distraction, shall we? And I'll zoom on in and let's see. Well, this is very nice, isn't it? Telling me where the left shoulder is, the head, and the right shoulder. How lovely. We have a potential head and shoulders on the go right now. And of course, that means that we have a neckline coming in somewhere around about here. Now, I don't know if I've necessarily positioned this correctly. It might be a million miles from 12K, LA, so yeah, why does it show up like that? Why does it go a bit green sometimes and not some other times? There we go. There she blows. So maybe the neckline could be considered to be around about this fuzzy line that we have at 11,121. That's 11,111 if you don't speak my language. Then and maybe that's what we're looking to. If we were to drop down then below these prices, maybe we could take a measured move off the back of this head and shoulders there. So come on. Let's take the trend line from the top down to the neckline and see if we have got around line with line there. That's how much of a poet and musician I am. And let's see where that would take us. Doobity-doo-doo. Okay, and that would take us all the way down to 9,587. Do-doodly-doo-doo. And if we look over at the CME charts, the CMEs are going over to this. No, whatever. Sorry, that song. Get out of there. Get out. Maybe looking down to this 9,000. Well, actually, let's call it the $9,665 gap. That's what we'd be looking at if that were to be the case over there. Forewarned is forearmed. How do these things perform in the world of technical analysis? Well, you can certainly do things to try and find out about it. Like you can read through these books, which are really interesting. This book here will maybe tell us something about. Let's have a wee search inside it and see if it says anything about head and shoulder. No, it doesn't have anything in there on that one. Well, cool. So you're not going to find anything about head and shoulders in that textbook. Now, textbooks can only tell you so much. A lot of the information here, when done from a sort of scientific perspective, in terms of these things, tests, methodology, when you're looking at these sorts of things, can be a little bit misleading in the sense that what you have here is some people trying to sort of apply a sort of clinical look at technical analysis when they look in the textbooks about things and see, from a sort of standoffish point of view, how things would go, with their gloves on and with their white jackets and everything else and their safety specs and everything else. But what we like to do is weld without a face protector on because we get stuck into the markets as traders, of course. And it's a little bit more complex, I would say, than simply saying, let's look at the sort of the statistical likelihood of these things playing out and whatever else. Really, when you're looking at all these such things, because this information is so dry, and really you got to wonder when people talk in this way, whether or not they're really traders or whether they want to get stuck in and feel about the market. Now, I think they probably are, to be fair, except the thing about it is that we look at things in a bit more of a holistic way because we really want to understand what's going on. We don't just want to sort of play off the back of what we might be seeing with a statistical edge, which of course is totally fine. Instead, on the channel, we want to understand what could be going on. So let's try and understand this right now in this phase right here. But we will preface it by saying that, of course, there's a 60-odd% chance that this won't work, right? Okay, dokie. One of those things that leads you towards saying that, of course, is the fact that the prior trend leading up to this has been bullish. And of course, you have to say that the trend is your friend until the end of the trend, when the trend bends and sticks one right in your eyeball. And if this is the case with this thing, the trend being the friend, then we have that 60% chance that this won't ever work out. So that's caveated quite nicely. We can move on then and say, well, what phase was this right-hand side of things in before we, just while we were, say, looking up here and saw the prices coming down towards this area, what did we see on the go? Now, of course, things like this, what they'll do is, these textbooks will tell you like, oh, let's look at seasonality. You're like, okay, there's not going to be much seasonality in terms of Bitcoin, but Christmas is always something to look out for, the Christmas season. Anyway, right. Where's it's talking about things like the MACD and stuff like that? Always looks at them in isolation and says, how good can you be when you're looking at how what's the statistical likelihood of being able to play something out with regards to one of these things, right? Okay, whatever. What we do as well on the channel is we look at things like how there was this bullish divergence here, Excuse me, I've got wind. I always seem to have wind when I'm doing these episodes. Probably something to do with me down in a cup of tea before getting started. Super pronto, like say Ken Vitamin pal. That's a little bit of Scottish chat for you. So here we go. This is sort of bullish divergence that we had during this downward trend here. And when you can see when you've got bullish divergence in the MACD, so often is that there's going to be a wedge. There you go. That's straight out of the Rocky Outcrop How to Trade sort of course, which is which maybe at some point be coming towards your eyeballs. But the thing about it is that nobody really talks about these things. But there you go. That's quite clearly demonstrated for you. Then what we had was these two resistance lines that we drew on up above, and they're of course taken from the back of a measured move. Now, let me just sort of fiddly about this thing and say, well, hey, if we'd broken out of this, when we broke out here and gone for the full wackety-dackety of the thing, that would have taken you up towards that 12,500 area. In which case, you'd have kind of undone that concept of that head and shoulders, what we already spoke about. But then if you were to use the textbook thing of it again, like Bulkowski talks about, you'd be looking for a 60% move, more or less, of that notion, of that measurement, and that's where we drew in this second line, giving us these two horizontal lines on the charts to give us the upper side resistance, okay, the profit taking targets, if you will. And then that's what played out over there on that side. We came up and we fulfilled that move. Nice. As it always is on the channel, by the way. And then we saw the prices sink back down again. How did that all go along the way? Well, of course, looking here between these high. This is a downward trend, right? We've got highs coming in here. Well, what am I trying to say here? We had the bearish divergence on the run up here on the left hand side of this big chunk of price action run up towards the head and shoulders, okay? Go up to 24-hour time frame again and zoom on in a bit so you can see what I'm talking about. On this chunk here, it was very much bearishly divergent. And then we came over here and the prices sank on down the way. And what did you get in at this point here? Well, it wasn't hidden bearish divergence. We didn't break past any resistance on this here. In fact, we saw this resistance line here, if we had drawn it in, which we had drawn in, but I've removed it subsequently on this, and we didn't manage to actually really break this line here. And that could be considered to be a swing failure at that point there of the right hand shoulder, and then we dropped on down again. And as well, other things we like to look out for, such as on this chart, I'm not seeing it so clearly at the minute, but a head and shoulder showing up on the oscillators down below often gives you a little bit of a precursor for these things. So anyway, there's that holistic look at things, and that's what's led to this price action currently. You understand the psychology yourself, like I've already spoken about, with having seen the prices come up towards this 11,800 area. Oh, so bullish. Back down again. Oh, buy the dip. Up here towards 12,500. Oh, what did I tell you about buying dips? Blah, blah, blah. In terms of the psychology of the market. Down here. It's just another healthy retrace. Buy the dip. And we're going up past where we were before. Oh, it's 11,800. Well, 12,000 here on the CME charts because of their premium. Oh, yeah. So we're going to push past that and go for a full measured move. Oh, we failed at that. Oh, we didn't. Oh, look, we're back down here. Oh, look, we're actually back lower than we were previously. Oh, my goodness. Maybe actually the story is changing. And then you get to understand why then, if the prices were to sink below this fuzzy grey line here, showing where the neckline is, or indeed the actual neckline here on this fuzzy grey line of this thing, why the psychology would then lend itself nicely to then seeing the prices drop back down here. What are you going to have at that point? Well, you're going to have, what we're going to call this side. We're going to call this side 8 my shorts. And then we're going to call this side on the right, if this were to have it happen, don't have a cow man. There you go, using proper punctuation and everything. I'm a fan of punctuation. So are we going to have the don't have a cow man aspect of this? And then ultimately what people would say happened is that this was the haircut of a, now let me just get this out here. This is my brush. I usually have green as my brush. Let's put an eyeball in here and a mouth in here. Rah, that's some teeth. And then we call that a scary looking Bart, wouldn't we? And that's what that would be in terms of crypto meme technical analysis for us. So that's what we could be looking at if that were to happen. Now, if it were to fail, what would be looking at? What would be BB biddy biddy bap biddy biddy bada babidi boop babidi boop babada bum 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 bum. Oh, what we'd be looking at on this front would be, of course, if we see the prices pushing up past that 11,900 price point in terms of spot, then perhaps, we could be looking up at a failed head and shoulders, in which case a failed pattern is in many respects as good as a working pattern. In fact, if not, they're just as good as each other, really. That's what the whole pattern, if you're looking at pattern stuff, don't be a noob tube. Instead, think about things in the sense of what a failed pattern might look like. And if we failed this thing and actually pushed on towards the top side and took out the head of the head and shoulders especially, and came in towards the median line of a parallel channel in the background, that would be quite positive for the prices, and that's 12,500 again. So then, then the psychology would be like, you'd have people out there saying, I told you so, I told you, it was buy the dip. But of course they're saying buy the dip here, then buy the dip here, they're saying it here, they're saying it right now, they're saying it on your Twitter feeds, no doubt, right now in this very second. And well, will they have to? Well, is it actually supposed to be this way around? Would it be saying eat my shorts? I don't think so. I think eat my shorts should be on the left. What they'd be saying is don't have a cow man as the prices go down. But of course, moo, you would be having a cow. Of course, right? Great, nice one. That pretty much covers up the technical analysis that I'm actually more or less willing to put out today, because as you know from recent videos in the chat about it, they don't get enough views and whatever else for me to continually justify putting in a great deal of time into these things. So I'm going to cut this episode roughly half as long as many of my previous episodes have been for you there. And of course, with a lot more sort of playful fun talking about music and whatnot. Now, of course, as well, don't be too put off if you are not a fan of pop music and you think that Rita Ora can get to, because there's no Scottish batter, get GTF. If you think that Rita Ora can GTF, then don't be afraid, because the last person I talked about was, of course, Lonnie Donegan, right? Okay, so that balances things out. You don't know who he is. Okay, cool. The last person before that was Randy Newman. Okay, you don't know who he is. And then the last person before that was, who was it before then? Who was it I was talking about before then? The Kinks, was it? The Kinks? Anyway, so, eclectic music tastes here as we look at the charts together. Yes. And that's really what we're looking for. In the meantime, if things just kind of fail on this pattern, where could we find support coming in at? Well, that 10,600 area towards the lower side where we have that white parallel channel. Of course, this here is more or less kind of a meaningless one. Let's dive over to another chart and see if we've got anything else that might give us an idea of where we could be going. Oh, look at this. It's a pitchfork. Oh my God, Rocky, your technical analysis is outstanding. Thanks. You're too nice. You're too nice. So this pitchfork here, which has been absolutely parfait, the French word for cake, has seen us come up here and touch right off this upper warning line. Now you might be thinking, but hold on a second, Rocky, it pushed out past it. Well, we had extended this out towards the top side, and we saw this hit off perfectly off of our extension of the pitchfork. So don't get your knickers in a twist. And we hit off that target absolutely perfectly. In fact, you know what? Everybody watching along the channel has been able to really, really benefit from the technical analysis recently. But I'm not going to encourage people to keep subscribing, of course, because people have been yapping about me and I'm saying that and too much in the comments. So just hit that subscribe button. Come down here towards the median line. Oh my goodness. So if we break down below the median line, which we're currently kind of doing as it happens, then how long's left in this hour? Wait, this is 12 hour. Oh, 1 minute, 2 seconds. Oh, we get to see an hourly close. Wow. If we're pushing time past this median line, then, the next target, of course, is coming in at that 10,800 area where we see the lower line. Of course, this is the upper warning line at the top end of the parallel channel. It's looking a bit white there on your screens. The upper line is this one, where the blue box ends and the green box begins. That's that one. The median line is this red one. This is called the lower line, then this is called the lower warning line. And where the lower line's coming in at about that 10,800 area, and that lower warning line there at 10,435. Things to look out for on the downside thereafter. 236 over here. Significante 236 here at 10,140. And of course, that's where this golden pocket retrace zone is. That's where your big question marks are going to be at. So every sort of chump out there, let's say it's chump, it's a type of dog food. Every dog food technical analyst out there that's been telling you rubbish recently about where would be the good time to buy it is wrong. The good time to buy it, if you want to have a low risk management buy, would of course be down here if you can muster up the patience for that. If not, then of course maybe we've got that failed pattern on the go, and I don't need to eat too much humble pie along with my words in that sense, because of course we'd be pushing past what I'd already talked about in terms of these targets. You'd know all about it along the way. Wouldn't that be groovy? Topside targets then coming in at where we've got this horizontal blue line, serrated blue line at, that's kind of starting to come in at around the same area as the warning line. Talking about that 11,700 area. Then the upper warning line, of course, 12,000 itself, and then movements beyond that, well, 12,500, of course, is going to be very much a bullish thing for us. Let's see if we can do that without any sort of bearish divergence on the go. The way this is shaped up, you'd have to take quite a significant rise up there to avoid the bearish divergence. In terms of the oscillators and how these things are calculated, I invite you to go ahead and do the maths. I cannot be effed, really. Let's just underscore that point. I'm not in this for the maths, but some people are. Oh, sorry, I forgot I was doing an episode. Yeah, some people are. I'm not, but you'd have to. What you can imagine if you look at this, sort of the way these things are calculated, is you need to see this drop all the way down towards this area and then have a really nice strong rise up afterwards in order to push these things up past the points at which they be coming in as being bearishly divergent, going back up into the overbought territory and giving you a nice rise up there, which could then be subsequently followed out by a non-bearishly divergent and a non-bullishly divergent tops and whatever else, and just sort of convergence across those layers as we go in with higher highs and higher lows. That would be healthy and upward side price action. That's kind of all we need to talk about. There are other things I could be talking about. For instance, have we filled in this gap over here in the GBTC chart? Let's check GBTCs. Well, we haven't. And you know what the GBTCs have gone ahead and done is put in another gap. Another gap there above us. Well, that's what you get with this thing. It's Mr. Gap over there. Let's put on another one. So we have two gaps now, and they actually remain above us. So these downward side gaps, I talk about how they're less likely to get filled out. Well, they are more likely to get filled out, less likely to get filled out. The only way that this would happen is if we gapped past this yet again. That'd be three gaps in a row in around about that price action. How about that for being crazy? Anyway, that's what we're looking at. And of course, are there other gaps on this thing? Well, there very much are, and they're all towards the downside, and we don't need to go banging on about it. Instead, I'm going to say cheerio, because this episode has now lasted for 17 minutes or 18 minutes, and we're back at the usual length of things. Bam, 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 bam. 2K subscribers by this time in 2 weeks. Yeah, can we do it? I wonder. Let me know. Share this episode with your friends. I'm sure they'll take a lot of value out of it. And much love. Right? Cool. Nice one. Catch you later. Thanks so much for tuning in. I'll see you in the next episode, which will be, let me just check my thing. Yeah, tomorrow. That'll be tomorrow. Cool. Nice one. Tune in again for that. See you next time.